All right, we are back. The Smash Property Podcast is here. Today's episode is all about should you buy an investment property now? This is a very common question that comes up quite a lot. People see interest rates moving and they often ask, is now a good time to get into the market? A lot of people seem to think that they may have also missed the boat with the market being where it is across a lot of the capital cities. So today we're going to go through some things that people can ask themselves and answer their own question as to should they buy an investment property now. Before we do that though, welcome back to Akira.
Thank you.
How are you doing?
I'm doing well. I've missed doing these podcasts. I feel like it's been, maybe 1 or 2 months? 2 months, close to.
Yeah, close to 2 months.
Yeah.
Yeah.
It's funny. I was getting in like a bit of an itch to get back on and start chatting about it together.
Yeah. We had a great start to the year. It's been
Busy.
It's been a busy start to the year. Obviously, very grateful for that and the clients that we're working with. But we've got some really awesome content and topics planned over the next couple of weeks and months. Like you mentioned, the sponsorships of the BMW Club Nationals, which is in April. We've also got a sneaky little podcast appearance that I will be appearing on very soon, and we'll announce what that is in the near future. Today's episode is, should you buy an investment property now? Very common question that people have. And we really designed this episode to help people really answer that question for themselves. Because if you ask me, should you buy an investment property now? I'm always going to say yes. And that's coming from, nearly 2 decades of experience in banking, property and finance. So I've seen, the rise and fall of many different markets and, I've seen it firsthand. And I will always tell people, yes, if you're buying the right property, there's always a good time to do it, which is now if you haven't done it.
Definitely.
What about yourself? How would you answer that question if someone asked you on the street?
I'm the same. I'm always going to say yes because of my first-hand experience with property. I think if you're strategic and you're planned about everything, you can see the benefits very quickly. I was actually surprised at how quickly, my portfolio started to progress and snowball. However, in the same breath, I think if you're not strategic and you're doing it willy-nilly, you're not really calculated about it, it can actually go south.
Correct, yeah.
So I think there's a lot of value in this topic in understanding and asking yourself the why you should do it, essentially.
Yeah, and that's a great segue into the first sort of point is really just asking yourself, like if you're sitting there now and you're like, I'd love to get into the property market, I'm going to go and buy an investment property. I really encourage you to just ask yourself why. And you might be sitting there going, well, yeah, because I want to make some money. Now, but let's be a little bit more calculated and strategic with it is how much money are you looking to make? By when do you want to make it? So I think being very, methodical with that question as to why you want to do it. What is the desired outcome that you're looking for? Very important, I think, before you even spend any money, is just ask yourself that question and spend a bit of time thinking about it. Maybe map it out, maybe draw it out, however you kind of visualize things. Because we're about to go through some questions that you can ask yourself, but I think it's a really, really important thing to just know the reason why you want to do it. I
agree. I mean, often when I speak to people, asking about what is the motivation behind doing this, you often get very generic answers like, oh, I want to be financially free, or, I want wealth. But of course, that's going to come as a consequence. But there's deeper reasons. Maybe it's, you really hate your 9-to-5 job and you're looking for a way out, or maybe, or maybe it's something like, you just want to spend more time with your wife and your kids, or vice versa, your husband. So I think it's one of those things with property. Having the real core motivation of why you're doing something will keep you going through the whole journey. Yeah,
absolutely. I think it's a great point to keep you going. So if you're sitting there and you're like, you're not sure if you want to do it, is now a good time? Let's sort of help the listeners with some of the questions that they can start asking themselves.
Yeah, definitely. So I think maybe you talk to the first one. we've both experienced this in our own portfolio building. But number one being sacrifice. What would be your perspective and why that is important on the journey?
Yeah, it is important. Now, sacrifice for me, during my come up to being a property, before I was a property investor, there was some sacrifice that I had to make just given where my income was at and my ability to save, right? So I knew that I wanted to do it, but it was, okay, what do I need to sort of sacrifice in the now to then have the ability to actually save, right? So for me, that was maybe not going out as much, or maybe not going away on this holiday. So just little things that you might need to ask yourself, are you willing to actually sacrifice that so that you can get to that first property? These are questions that you're going to have to ask yourself, because if you're anything like me, I would save and then I'd do some silly shit, and then my savings will come back down. I'd have a big night, or I'd get a car loan or just stuff. And this was in my early 20s. But if you have a bit of an impulse to those sort of things, like, you just got to be realistic and go, hey, like, can I actually, am I willing and truly able to sacrifice whatever it might be to actually save the deposit? Or if you want to build a portfolio and get a couple of properties, to be able to continue those sacrifices as you go through the journey.
With that, I completely agree with you. Sacrifice is one of those things. I think it's about delayed gratification with property investing to a degree. Many people want to do it. Almost anyone would want to be pulled well through property. But I think it does come with the acknowledgement that you have to put certain things off for a period of time whilst you're saving for your deposit. I mean, suddenly I had to do so, whether it was going on a holiday or, buying nice things for myself. I just took a little bit of extra time to really focus on what my main goal, and I honed in on that. All I thought about was getting to my 100K deposit. And once I hit that, I was like, all right, now that I've got the ball rolling there, I can splurge and treat myself. So it's knowing that the good things are coming, but knowing that you have to focus on the main thing first, that being your saving.
I think it's a good point, because, and that's sort of what I wanted to go initially, is just because there is a sacrifice doesn't mean it's like, 10, 20, 30 year sacrifice where you're not going to be able to do anything that you like doing. That's not the case. It's just at certain points of the journey, you might need to pull back on certain things and certain spendings. But then, hey, there's certain times, and I'm talking firsthand, where you're like, hey, no, now I'm going to go on that nice holiday, and I'm going to go and buy that car that I want to do because I've got the means now to be able to do it. So I think just have that in your mind if you're out there and you're like, oh, I don't want to sacrifice 30 years of my life. Like, I want to live. Don't get me wrong. I've absolutely lived. But there's just, certain weeks and months where you just have to pull back a little bit so you can spring forward.
Definitely. And I think, I actually was very grateful when I was, 17 years of age. I was working at 14 years and 9 months. But I actually had a friend when I was 17 years old walking home from school. And we were having this discussion. He was like, why do you work so hard? Like, what drives you to do that? Are you going to, your pharmacy job after work every weekend after school? It's one of those things where I was like, okay, what is the real reason that I'm doing this? And my mind, when I looked at my parents, they were older and they were working really hard at the age of 50, 60. And I'm like, what can I do not to have that happen for my situation in my life? And I was like, what I'm going to do is I'm just going to hustle. I'm going to work, and look for a way so that when I'm older, I get to breathe a little, enjoy the fruits of my labor a little bit more. So I was really strategic and calculated in my mindset from a young age to make sure that I could at least pull my foot off the gas slightly when I was in my later years. Yeah.
I think the other topic, or the other question that people need to really ask themselves is, how much risk are you willing to take? And this is important because with everything, there's no such thing as no risk. With any investment, there's no such thing as no risk. And particularly with something as dynamic as property, there's varying risk depending on how you invest in property, because there's lots of different methods out there in which you can invest. And and as the investor, you need to ask yourself, am I willing to take higher risks to potentially get higher rewards? Or is it more, hey, I want that lower risk, but I understand that there's going to be a little bit of a lower reward with that. So then this is really important because, there's traditional, residential investing you can do. There's commercial. There's all these newer styles of investing in property where you get potentially higher yields, but with that is a lot of higher risk as well. So just really being honest with yourself and going, where do you sit on that like framework? Like, are you a high risk or you a low risk, or maybe you're in between? I think a very important thing before you even touch any investment or put your money anywhere is just ask yourself those questions first.
Yeah, and to be able to find out more about what your options are, you can start researching different strategies and how to do it. I think, with property, there's, like you said, 1,000 different ways to come to an outcome of passive income and increasing your net worth. But I think at the end of the day, everybody is an individual and you've got to look at yourself honestly, see yourself for what you are, and make sure that, in line with your work, in line with your lifestyle, are you investing accordingly? Because at the end of the day, you're taking out a debt, a loan. You've got to repay that back, and you are liable for that. So you've got to be very calculated on making sure that you understand what's involved and how to do it, essentially.
Yeah, absolutely. So
next one is time.
Yeah,
maybe you talk to that.
The time aspect. Now, this really comes back to the first sort of point is like, what outcome are you trying to drive with investing in property? But then we've got to attach a time component to that, and it's important, right? Because if you're, for example, saying, I want to replace my income, you've got to ask yourself the question, by when do you want to replace your income? And, this sort of ties into the next bit as well, is are those timelines realistic? Because you might sit there and it's easy to say, I want to replace my income in 5 or 10 years. Is that realistic for you to be able to do that from your current position? Yeah. So I think just understanding and being real is how long is it actually going to take to get to a point where you can, maybe work part-time, or maybe you don't have to work at all. But just knowing how long that's going to take, and then are you comfortable with that? Like, because that comes back to the sacrifices. Like, okay, are you comfortable having to sacrifice things for that period of time so that you can get that desired outcome of whatever it is, the replacing the income, the, paying off your own occupied debt, whatever. There's a million different goals that you can have with property. But just having that timeline and being real with, if you're starting today and you don't have any savings and you haven't got any properties, there's very little chance of you being able to replace your income in the next 12 months.
Unless you're taking a massive risk somewhere along the journey.
Higher risk in investments. But yeah, just the time and the realism is important.
Correct. And I also, just above and beyond that, is also the time, the investment that you will need to put into this journey. The research that you're going to have to do, the conversations you're going to have, the hour-long conversations with your accountant, with your broker, with your buyer's agent if you're using one. Those things are over and above just the research of making the decision on each property, are things that take time. And you've got to be able to enjoy it as well to a degree so that you can get to your goal.
Yeah, I mean, the buying, like you said, the research process, if you're doing it yourself, like that does take time. And
especially if you want to do it right.
And a lot of it too, if you want to get it right, obviously the buying process in itself takes time as well, and there's just stuff that comes up. So, you got to look at your life. Are you juggling, kids and family and whatever, or you got some capacity to really manage that yourself? Or like you said, are you going to outsource it to a BA or similar to help you on that journey?
Yeah.
The next one we sort of tied in a little bit here was being realistic. Which I think is very important. We've been lucky enough to speak with a lot of investors over the course of the last year or two. And I don't want to say that people are unrealistic when it comes to expectations with property, because I know what's driving that, right? Like a lot of these people are in jobs that they don't like. They're in situations they don't like. So there is sort of that, I don't want to say desperation, but that hunger and that fire to, hey, I don't want to do this anymore. Like I need to get results like now. And I totally get it. I'd had nearly 20 years in the corporate world, so I know exactly that feeling of just not wanting to be in that environment anymore. But there's still, it doesn't take away from, okay, I know we want to get out of this job or this situation, but hey, we've got to be realistic with how long that's going to take and what outcomes we can actually get in the time that we're sort of looking at. So I think, so that you don't get disheartened on your journey, I think it's important up front for you to be realistic with yourself and go, no, hey, this is going to be a 5-year journey and a 5-year plan. But after that 5 years, I'm going to have X result and I'm going to be able to do the things that I want to do or whatever it might be.
Agree with you completely. It's a lot of dedication that you will need to have to the journey and the commitment of the goal that you have set for yourself. And I think the good thing about it, from my experience, is yes, you need to be realistic, but the more you pour into it, the more properties you purchase, especially if they're the right ones, they start to compound and expedite the process. So certain things in the market would change, say rates come down, your passive income will increase substantially during that period. So you've just got to be very honest with yourself to understand that, yes, there are things outside of your control that will happen during your journey, but knowing that you have that goal and how to work through the whole process in and around all the changes that are going on in the economy or everything else in the world.
Yeah, for sure. And you sort of touched on that other point, the commitment there, like, through to really see results. Investors do need to stay committed to the process. And like I said, it does take time with property. So you need to be committed through that whole time. And, I've seen a lot of investors where, they'll get to maybe 1 or 2 and then, the commitment wanes and before you know it, maybe a couple of years goes by and they've missed another market cycle and
life just gets in the way.
Advantage of. So the successful investors that really do get that financial independence, they're the ones that are just 100% committed to that the whole time. So you've got to, again, ask yourself the question is, hey, can I commit to this over like a number of years to really get the goal that I'm looking for?
Definitely.
Which is important.
And I think just the commitment to making sure that you're always seeking out knowledge and information. You and I have been in this for a while. It's similar to playing a musical instrument, I would say. Like, I think it's one of those things with anything, the more you think you know, the less you actually know. So similar to property, you always find new things that you can understand and learn about, even though we're years into this journey and we've got quite a few properties. There's always something to learn.
There's always something new. And that's personally what I love about it. Like, it's not that no 2 days are ever the same, because that's not the case, but there's always something to go, oh, okay. Or you have a conversation with someone, you have a coffee with someone, you're like, oh, okay, yeah, I hadn't thought of it from that perspective before.
That's right.
So like keeping that open mind to everything, and I've fallen into the trap over the years of being fixed on, no, the way that I'm doing it is the right way, and it's like, no, hang on a sec, mate, that's not how it works. Like, you've got to take a step back and be open to new suggestions and ideas, because you never know. Like, you might hear something in passing, and it might just sort of
connect at that point in time. Maybe not like 4 years ago, 5 years ago on your particular journey, but now that you're at this point, maybe it does make sense. So yeah, definitely.
So let's sort of give a view on, like, I'm keen to hear your opinion on, let's say you were starting from 0 properties as of 2025. Like, what would you do? How would you do it? Putting yourself in the shoes of an investor starting from scratch today.
That's a good question, actually. It is very different now in 2025, I will say, to when I started.
Yeah.
Obviously, we're now in a different kind of circumstance with the economy, with inflation. So I think, firstly, the why. For me, I'm a very visual person. And this sounds tacky or silly, but I would do a mood board. Like, I would put my dreams and my desired outcome somewhere, whether it's on a mood board, in a journal, somewhere. So I would write out my why first, like really have it concreted so that I know what I'm doing and why I'm doing it. I think from there is drown myself in education. I think for me, listening to podcasts, getting my hands on books would be step 2, along with obviously saving for my deposit. The deposit, whether you're using equity, maybe you've got a principal place, or whether you're starting from scratch, is the hardest part from my perspective in the journey. So really just making sure that I've created a budget. I know what my timeline is in regards to getting to my, maybe it's 80, 100 grand off a deposit, and then working out, what strategy based on the research that I've been listening to is going to be good for my particular lifestyle and situation. If I was working to a full 9-to-5 job and I'm really hustling at my career, me personally, I wouldn't want to take on a lot of risk. I would go more so stock standard, high growth, good yield, and then be able to use that platform to try and buy into market value so that I have at least one in the bag. It's not causing me a headache. At least there's something there.
Yeah.
I'll let time do its thing and then jump into the next one. So me personally, I think, I would look at myself, ask my questions on why I'm doing something, and then strategize accordingly.
Yeah.
And I think at the end of the day, it's going to take time, right? So use that time to your advantage to, seek knowledge. How about you?
Yeah, look, for me, it's a hard question because I'm obviously deep in the property game, and I've been in it for a very long time now. But trying to pull myself out of it and put myself in the shoes of someone who's brand new to it, I'd be looking at, and I wanted to do it. Like, I'd be looking at affordable areas, and I think, and the reason I'm saying that is because I know there will be a lot of people being like, they live in, Sydney, for example, and they're like, there's no way I'm going to be able to buy a house. It's $1 million. It's 1.2 to even get, a house on a little 300 square meter block of land. But there's tons of affordable locations across the country. And when I say affordable, I'm talking in that sort of $500,000 range. My personal opinion is that's where a lot of the, gains will be had over the next couple of years when it comes to the property market itself. So that's what I would be looking at. And I'm obviously saying that from the perspective of seeing it. But if I was brand new to it, like, and like I did with my first investment property, I bought where I could afford, and I didn't try and save and catch up to the market, and try and buy an investment property in Sydney where I lived. So I would just be getting affordable houses in affordable areas. To your point, find an area that's got a good growth potential based on historical information and future prospects. Find one that's got a decent yield, so you're not too much out of pocket. Don't be focused on positive cash flow from day one. That $100 a week, ask yourself, what is that going to do for you in the now? Probably not a huge amount. Rather get the growth. That's where the real gains are when it comes to property. And that's the real basic fundamentals of it. Like, it's, in my view, a pretty conservative approach to property. Like we said earlier, there's loads of other higher risk, potentially higher return styles of investments. But for a new rookie investor, I wouldn't be encouraging them to take higher risks. I'm like, just get your feet wet, get a house, get a property under your belt, and then take it from there. Like, that's what I'd be doing. And look, I'm a pretty hungry kind of investor. Like, I'd be looking to replicate those results pretty quickly. Just like I did in my own portfolio way back when, was, get one as soon as you can. As soon as your pay rise goes up and you can borrow more, go back to your broker, unlock the equity, take the equity, go and buy another property with it, rinse and repeat that, over and over again, if that's what you desire. And like I'm telling you, over a 5-year period, like, your portfolio and your life can change so dramatically. And when you think about it, 5 years in the scheme of, the average person's life, it's a significant amount of time, but it's also not a huge amount of time. And so much can change. Like if I look back 5 years ago, my life was good, but now I look at it and I'm looking at all the things that have happened in the 5 years. It's been great. I was able to, leave a 20-year career behind in a job that I didn't really love, start a business that I'm absolutely passionate about, go traveling, buy cars that I want to buy, just do things that I want to do. And that's all thanks to property. Like, and I'm no smart cookie, right? Like
if
I can pull it off, like the average person can as well. It's not, you don't have to be super smart. You don't have to be rich. You don't have to have, rich parents, or you don't have to win the lotto. Like everyday people can do this so long as you are committed and you have all the things that we just went through and you ask yourself those questions, like you can absolutely make it happen.
I love that. I honestly, genuinely think that's such an important point. It's definitely possible, and you just have to be able to, dig deep and start.
Just got to do it, yeah. And like, we're obviously buyers agents, but just looking at this objectively, like if you've got the time, the commitment, the drive to seek out the knowledge and speak with people, and you can absolutely do this yourself. Like it's not hard. Or if you're time poor, or you don't have the confidence, you don't have knowledge, then think about a buyer's agent. But there's no reason why you should be put off doing it. I think now's as good a time as ever. We haven't really spoken about interest rates and the recent cut that just came down, right? Like, obviously no one knows what's going to happen tomorrow. No one knows where interest rates are actually going to go. People can sit there and try and speculate all you want about, it's going to go up, it's going to go down, blah, blah, blah. But the reality is we don't know, okay? But when we look at historical information, which I love to do to give us an indication of what might happen in the future, we had this big interest rate cycle, came up over the last sort of 18 months, 2 years. It's peaked and it's starting to dip back down. If that dip continues coming back down, the property market is just going to explode. And my view is pretty simple in that interest rates come back down means more people can borrow money. More people borrowing money means more people looking in the market. More people looking in the market means a higher demand. Higher demand pushes up prices, right? So, and that's just looking at one factor of the whole broader economy of how things work in the property game. So if you haven't done it, my opinion, and this is not financial advice or anything like that, is just think heavily about doing it, because I feel like this is going to be, one great opportunity. If you just buy one property and you see through this next cycle, you're going to see some amazing results. And obviously buying the right property in the right market, as I always say, but critical time to do it. Think back to when we had that COVID boom. If you own a property pre-COVID, post-COVID, you're living in a really nice situation. I really feel like this is going to be another replication of that. Again, not every market is going to go like that, but you have to get the right market at the right time. And there's loads of resources out there for you to be able to pick that. So that's my opinion on if I would do it again and how and what's happening. So
yeah, and also don't get deterred by people online as well. You're saying you got to have 10, 20. These people have like 100 properties. Yeah. You don't have to have any of that. You just have to have a few fundamental properties that are doing the right thing. Yeah. So being strategic and not being put off like that. This is some unbearable,
unrealistic.
It's not a huge, it is a big mountain, but it's not an unrealistic mountain. It is possible, especially if you've done it, especially if I've done it.
And it's a great point. It's very easy to be put off and see all these people with double and triple digit portfolios. I see it as inspiring. It's great, but just know that the time and space in which a lot of these investors have got to that level, the landscape was very different. A lot of these guys did it pre-2018 when the lending requirements were totally different, right? The economy was totally different. The property market was totally different. Interest rates were totally different. So just put that into perspective can they actually replicate those triple digit properties now or those portfolios now? Probably not, or it would be very, very difficult to replicate the same results. So put yourself in the realistic shoes of what can you do now. And to your point, getting to two to four properties, majority of people are going to be in a phenomenal position, right? And 2 to 4 properties is very, very achievable when you are talking about affordable markets in that sort of $500,000 range. So achievable. And that's what I recommend.
For sure. And now just as a side note, you get a lot of cheeky comments. Oh, where the hell are you finding properties for $500K?
I love
they
that.
are out there.
I love that people don't believe us that you can find a property for $500K. I absolutely love it. But our clients can attest to it. We're buying them. So it's realistic.
And they're seeing the gains already, not even like a few months after.
I love those comments where people are like, yo, you can't get where you're doing that. And I was like, mate, we're doing it. Like, I just wish we could be like, hey, mate, talk to this client, talk to that client.
Probably could.
Because it's very achievable. It's very realistic. I think that will kind of do it for today's episode. So it's great to be back and, filming these potties again. We're obviously going to be kicking off the new season of the Smash Property Podcast. As we go through, if you haven't done so already, please join us on our journey and subscribe to the YouTube channel that you can see here, or join us on socials. We've got tons of content coming out every single day across Instagram, Facebook, and all the rest of it, LinkedIn. So if you're on any one of those platforms and you want to stay up to date with the latest property information, don't hesitate to subscribe. If you need help on your journey and you want to have a chat about how we can help you build and scale a property portfolio, as we've done for ourselves and investors over the years, reach out to us, smashpropertyinvesting.com.au, or call us 0452 046 274, or just send us a DM on whatever social platform you are on. But thank you so much for joining us back again. And until next time, thanks so much for watching. We'll catch you soon.